Everyone's talking about ChatGPT, Tesla AI, and robot assistants, but do you really know which companies are powering this recent AI intelligence? Well, in this video, that is exactly what we are going to be going over. We're going to be looking at why AI is crucial for the future, of course, the top players and the underdogs within their respective fields, and what exactly would make a great investment going forward, as in a gold rush, the pickaxe suppliers make the most money. So why exactly is AI so important? Well, if you weren't aware, it's obviously going to be the future. I mean, half of the video script in which I've used for this video is made by AI. So it's obvious that this is going to be something going forward into the future. It's not a bubble anymore like it was back in the early 2020s. It is now here, and it's certainly going to be around for a long time and progress further and further. Now, in my opinion, AI still has a lot of room to run. There is still a lot of development that actually needs to go into it. It's quite forgetful at times, and it doesn't actually scour the web properly. There is certainly room for improvement, and as technology, these GPUs and CPUs only increase, these data centers are going to be cooled more efficiently. These stocks are going to go absolutely parabolic along with the incline of AI. So within the world of AI and the stock market, there are currently only really three mega companies in which are dominating this field, and that is obviously NVIDIA, of course, AMD and Intel. NVIDIA is, of course, number one, with its core strengths being its massive market share. It's now at a market cap of $4 trillion as of recording this, which is absolutely incredible, and it owns 80% of AI accelerator market shares. This company absolutely crushes it, with it having the CUDA software ecosystem, which is a must-have for developers in the AI world. It has high-performance hardware from the H100 and now Blackwell chips, the B100, which is obviously huge for NVIDIA going forward, and it has end-to-end AI infrastructure from gaming to supercomputers. This company really does do it all within their product pipeline. Now, the business strengths, of course, are absolutely incredible, with AI revenue growth over 70% of its data centers revenue is now AI related as well. They have high margins, premium pricing due to dominant position within their current market, of course, and key partnerships with the likes of Meta, Amazon, OpenAI, and Microsoft. And now looking at AMD, the number one competitor to NVIDIA, of course, they have the core strengths of their MI300X chips, a serious challenger to NVIDIA in both interface and training, optimized for large memory workloads, which is obviously going to be huge going forward as these data centers require a lot of memory. AMD also focus on CPUs as well as their GPUs, which inherently give them an advantage when it comes to compatibility, which NVIDIA really does kind of lack on, as they don't supply CPUs like the Ryzen chips in which AMD do, or Intel, which is of course the other company. And for the business of AMD, they've previously just broken out on their stock chart, which we will get onto later on in this video, as it is still a stock analysis video, and it looks to be going absolutely phenomenally at the moment. It is undervalued relative to NVIDIA. It has a lower PE on a forward PE basis and a trailing PE basis, and its diversification, as it's dominating console chips within PS5s and Xbox, the server CPUs, the EPYC, and now all of its AI GPUs too. Furthermore, AMD has its MI400 series coming in 2025, which is obviously this year, targeted at closing the performance gap to NVIDIA, which is going to be absolutely massive. Now, finally, Intel. This is a company which has been struggling on a stock basis for the last couple of years, but it is still fundamentally very strong, with its core strengths being its Guardia AI chips, which is a cheaper version of NVIDIA and comparable to some of the backmarkers for sure. Its strong AI edge and vision, thanks to its Mobileye autonomous driving chips and FPGA portfolio. Intel also acts as a massive geopolitical hedge for the United States, as the majority of their products are actually manufactured within the United States, which has also gained them billions of funding through the National Chips Act. Furthermore, Intel has massive legacy relationships, as this company has been around for years and years, if not probably decades at this point. It's something in which it just has always intrinsically been linked to large companies and obviously government. So those are the three main companies in which are inherently ruling this current space, but there are also massive challengers coming for these top positions, and three to mention are Taiwanese semiconductor manufacturing company, also known as TSMC, Broadcom, and Marvell Technologies. So Taiwanese semiconductor manufacturing company isn't actually a chip designer, but they are a very crucial and critical role for the development and manufacture of a lot of these large market cap companies to really produce what they have designed. So they are obviously always going to take a large proportion of market share. They are not specifically betting on chip growth. They are just the backbone of the manufacturer. And Broadcom is a company in which designs custom AI chips for big tech. They are quietly gaining massive traction with ties to Google and Apple. And finally, Marvell Technology is a cloud-optimized chip manufacturer, which also have rapid growth within AI networking and data transferring. So again, massive companies coming up within this space. It could certainly be something in which will just absolutely go parabolic over the coming years. Maybe the majority of the growth has certainly already been and gone, but when we do look at a semiconductor sector chart, we can really see that these stocks are properly starting to expand now. So if you've already skipped to this part because you know about all of these AI companies, then welcome to the stock analysis part of this video, where we essentially go over what we're looking at and if these stocks are actually something in which we should be looking to buy into. And to start this all off, we're going to be, of course, looking at the number one of this video, NVIDIA. Now, this stock has just previously gained a $4 trillion market cap valuation, which is obviously absolutely massive. I knew it would happen by the end of the year. Obviously, it was just obviously something in which is going to happen sooner. If we do look here on the chart, we can see that price targets actually suggest there is a current near 7 to 8% upside on the average, with the maximum coming in at a 54% upside for the next 12 months price target. Now, this stock is actually in a bullish crossover, or a golden cross on the EMAs here, which indicates that we can see there is going to be a lot of volume traded into this stock, as this is where a lot of hedge funds and Wall Street look for when buying into a momentous position, which obviously this stock is. It's closing consistently way above all of its EMAs, which can indicate it's starting to look somewhat overbought. But if we do actually look at its Bollinger Bands here, we can see that we are actually just about in a relatively safe area at the moment. It does still look to be as if it is slightly overbought. We could potentially see this start to close back into its 20-day SMA, which is quite likely. But when we're in a market like this, where Nvidia has just reached an all-time high again, realistically it's just probably going to power all the way up to around the near $200 mark by the end of the year if the macros go within its favor. So now taking a look at AMD, or Advanced Money Destroyer, however you see it, this stock has been in a regression cycle for quite some time now, and it has finally broken out, and I think it's fair to say it was deserved. Now, this stock has done incredibly well today. As we can see, it did fall back down to this level of support here, bounced around it, and is now jumping back up to its next level of resistance. Here you can see, of course, we are closing up to this Bollinger Band, which is good. It indicated that we reached a more sustainable level within this stock, which is exactly what we want to see. Obviously, the stock is confirmed to be breaking out now, which again is exactly what we want to see. And again, looking on the EMAs, it's in a golden crossover and closing consistently above all of its EMAs. If we do actually look here at the price targets, we can see on the high end there is a potential upside of a 37% gain, but the average actually suggests there's only a 5.7% gain. Now, for me, I do actually agree that this is relatively accurate. However, I think retail investors are pouring heavily into AMD at the moment, and I think it's only going to cause these analysts to actually increase their price targets along with the price, because these analysts very rarely want to be wrong, especially when a stock is really, really climbing. So it's fair to say that I think when this stock does start to climb up to the 160 level, which I think it will do, I'm not saying it will look sustainable at those levels, but I do think it will. I think we might see analysts start rising their price targets or raising their price targets, and from there, we're just going to see more money pour into this stock, as people don't want to be wrong. So now looking at Intel, again, like I said, this stock has just had a poor few years now. It's really not doing incredibly well, and it is actually one in which, despite having such a fundamental part within a lot of PCs and AI, I would stay well away from. So on a 12-month price target here, we can see there is a potential 18% upside, with the potential downside being a 40% downside. Again, another reason to stay well away. If we do look here at the EMAs, we could actually see now, which is the first time I've seen this stock looks to be somewhat sustainably closing above the all of the EMAs, sorry, and especially the 200-day EMA. And if we do actually look here right now, as of today, Intel is closing, if it consistently closes this high today, above or closing into, sorry, a bullish crossover, which could really indicate that the momentum, sorry, is going to really shift for this stock. But for me, it's still something in which I would side with a lot of caution. It's not one of the momentum stocks in which I would say specifically closes and reaches all of my rules. This is something in which I would still have a lot of caution in. There is a definite potential to momentum trade this, as this does now look to be in a sustainable level for a breakout. But when we do look at its valuation, it's not looking too particularly good, which is exactly what I would really hedge against and argue why I wouldn't get in. So for me, it's something that I would stay out of. There could potentially be some money to be made within this stock, but for me, it's a no-go. And if we do actually look at the Bollinger Bands, we are looking to be relatively overvalued now, overbought, sorry, which indicates that we could potentially see this climb or fall back down to its the 20-day SMA, sorry. Now, looking at the semiconductor ETF here, we can see that this basically went sideways before the Trump tariff day or whatever it was called. I can't even remember now, and that is exactly what we did want to see, but then of course it fell back down. So when we see these ETFs go sideways like this, they just wait for a breakout and then they finally hit the ground running. Obviously we didn't see that in that case. We saw tariffs come into play, which caused the market to correct, but from there now we are seeing this absolutely rally up, which is really good for the broad market and of course the large caps within this sector. So this video, I've basically gone over these large caps, the top 3 AI players, and of course there are loads and loads of AI players still underneath this that weren't mentioned within this video, so please do let me know what AI stocks you're looking at in the comments. Of course, I'm not telling you to go out and buy these stocks. This is not financial advice. This is just my own personal opinion and what I'm looking at. So with that being said, I hope you have enjoyed this video and I will see you for the next one.